we are at 12 and 5, so let's get started. Thank you, everyone, for taking some time out of your day to listen to us speak. This is our Why Buy Calgary webinar. We do this weekly. Some of the information will be the same each week, but we do add a component every week to make it different and continue to educate everyone. So we'll start off with some introductions. Myself, I'm Alex Wilson, owner and broker of record of Remax Wealth Builders Real Estate, been selling real estate in Toronto for 15 years. Number one Remax agent in Canada for individual transactions in 2022. Number 11 agent worldwide. Inducted in the Remax Hall of Fame. Awarded the Remax Lifetime Achievement Award at 35 and awarded the Remax Circle Legend Award, and I was at 40. But none of that's relevant to you. What's relevant to you is I have had a very successful investment journey. I've turned a $39,300 deposit into a $17 million real estate portfolio, including 15 condos, High Park triplex, and an apartment building in Hamilton. I know what I'm doing, hence the expert designation in the email. And so do my associates, Nish and Kyle. They know what they're doing, and we're all about transparency. So this is my whole portfolio here. This is everything I own. From an investment side, we do own an office building and our residence, but these are all strictly investments. Everything here, including my investments in Calgary, and this is the current market value in those. And this slide takes a very important relevance because what we're going to explain in future slides in this presentation when we're going through the debate. And so my current market, my portfolio is 17 million. But again, there's mortgages on these properties. I don't have $17 million. It's mostly owed to the bank. But I can build incredible wealth in real estate when I hold it over time. So in 30 years, my whole portfolio will be paid off. Why is it going to be paid off in 30 years? Because there's 30-year amortizations on mortgages. And every month that a tenant pays me rent on that property, that mortgage balance gets paid down. And then in 30 years, I will have no mortgage balances and I would have $42 million. And where does 42 million, how does that jump from 17? Well, at a very conservative 3% compounded annual growth rate, that is what I calculated the whole portfolio value at 30 years. So I want to show people the value of holding real estate over time, because if you do participate in real estate in the short term, you can lose money. And I'm going to show you an example of how I could lose money if I reacted and sold something in the short term in the Toronto market when we're going through our debate. So I just want to show people the value of buying, holding real estate. If you buy and hold in the short term, you can make money, but you can also lose a lot of money as well. Always buy and hold, because you never lose money in real estate unless you sell. So don't put yourself in a situation where you have to sell. Kyle.
Hi, everyone. My name is Kyle DeVigi, and I have been buying and holding real estate for over a decade now. The first property that I bought was in 2012. Alex and I actually invested in the same project, and since then, I've been able to grow my portfolio into 6 different properties now. The vast majority of that was done while I was working in a previous career. I was actually the draws manager running Lotto 649 and Lotto Max across Canada on behalf of the provincial lotteries. And during my time there, I came to learn that about a third of Canadians were looking to fund their retirement by winning the lottery. That's absurd, considering winning the lottery is one in multi-millions. It's just not going to happen for most people. So instead, I decided to leave that and start helping people invest in real estate full time and to help them build generational wealth. And I've been really good at it. I've been inducted into the Remax Hall of Fame recently. And this year alone, I've helped over 170 people across Canada to invest in Calgary real estate. Alex, if you want to show my portfolio quickly. Again, we're all about transparency here. So you can see the 6 properties that I have. The most recent one was purchased in Calgary, and I'm planning to purchase my next one in Calgary as well. I strongly believe in a lot of the major markets in Canada long term, but Calgary is where I am personally seeing significant returns. And this episode, this seminar today is all about diving into that. You're on mute, Alex.
And Mr. Nish. So I'm just answering some questions from people that were Normally we'll answer all the questions at the end, but I just noticed some questions that flew right in, and I'm just answering them quickly right now, typing. We'll answer them live later.
Thank you, Alex and Kyle. Hi, everyone. I'm Nish. I have been a realtor for 3 years, literally 3 years yesterday. So that was a milestone for me. Prior to my real estate career, I was in a different business altogether. Unfortunately, the business that I was in was impacted by COVID, which meant that I had to pivot. Thankfully, I started the journey to get into real estate before things went sideways. So I was well positioned when it came time for me to start my career. I began in the resale realm, but with time and energy Alex has spent, and Kyle as well with me, really understood the benefit of the pre-construction market and how I was able to utilize real estate as a way to build a strong financial future for my family. I had invested in real estate starting in 2006, and then again in 2017 in the Toronto market. But truly to be able to build my portfolio and see the type of growth that I wanted to establish that secure financial future for my son and his children after him, I had to look at a different market, and Calgary became where we put our focus into. And since then, we have purchased or have a financial stake in 7 Calgary properties. In total, we have 9. The last 7 that we purchased were all done over the last 2.5 years. And we'll get into some of those reasons as we push through this presentation. Alex, if you want to switch over, we can take a look at what my portfolio looks like as well.
There we go.
Brilliant. So you'll notice that since 2021, the last 7 and the most recent being this past spring have all been in Calgary. I have them staggered over years to allow for closings, which kind of ties into one of the questions that was asked. And the reason we chose Calgary is because it's a market where you can still get in with almost little to no barriers financially. And you see the upside when it comes to appreciation, but also the rental component, which we're going to dig into also.
So in just 2022 alone, we helped 350 people from across Canada invest in Calgary and sold over 150 million in pre-construction units. And our team has personally invested in 10 plus Calgary pre-construction units. That's getting closer to 15 now. Kyle's in the process of finalizing one as we speak. So congratulations, Kyle. So we are still putting our money in Calgary. I just know you wanted to say something, Kyle?
Nope. No, just still investing in Calgary, working on a deal right now.
Yeah. We are still putting our money where our mouth is. And now when we show that value of buying and holding real estate over time, and we really see it as we're building our own pension fund. Now our numbers may seem large to you if you're just starting out, but we want to show you that even starting out small and growing your portfolio can really have a substantial impact on your future. So if you just started with $1 million real estate portfolio, the value of that in 30 years would be just over 2.4 million. Again, that's at the 3% conservative annual growth rate. I adjust that for inflation so you can understand what these numbers mean with today's purchasing power. That means it'd be worth the equivalent of $1.4 million today. And if I pay myself a 5% return, remember that portfolio is paid off in 30 years. So if I apply a 5% rate of return on that portfolio, that's worth 1.4 million on today's purchasing power. That means you could pay yourself the equivalent of $70,000 today. Now I recommend a $42,000 payout because that's at a 3% rate of return. And then now you're building that generational wealth for that passing on, because you're not losing anything to inflation, and you can pass on that portfolio to your next generation. So you've built a pension plan if you bought $1 million worth of real estate today. Now, when we say buy $1 million worth of real estate, doesn't mean you have $1 million of cash in there. That would be 20% down. So you'd be investing $200,000. If you invest $200,000 today into real estate, in 30 years, you'll be able to pay yourself a salary of anywhere between $42,000 to $70,000 a year, depending on the rate on what you want to take out of the portfolio every year. You've built yourself a pension fund. Those numbers double when you go to 2 million, triple when you go to 3 million. These are things that we have done ourselves and everyone on this call can do. So without and again, that now what we showed you, buy, hold real estate over time will generate you significant wealth. Okay, so let's debunk Calgary is a bad investment. Kyle, I'm going to have you handle this first one. And this is a common thing. People go, there's lots of land in Calgary. They'll just build more. Kyle, is there lots of land in Calgary, and what is your rebuttal for that?
There is quite a bit of land in Calgary still, but the city is actually starting to push up against the boundaries. We see that in East Calgary, where we're literally developing right to the edge of it, and then there's Chestermere, which likely won't be amalgamated into Calgary. Now, there is the opportunity for the city to expand, and it does seem like there is a lot of area, and there is a lot of good land that can still be developed. However, you can never replace the land that is closer to downtown or closer to existing hospitals, closer to the universities. You can never replace that. The only thing you can do is get further and further away. And right now, Calgary, you can still travel. It's very easy to drive. But as you continue to have record populations moving into the city, that is going to continue to put more and more pressure on the existing infrastructure. So someone's not going to want to be an hour drive away to downtown, even though the city can hypothetically extend, forever. The people are going to want to be close to the areas where they're working and where they're living. And the closer to the downtown core, that's always going to hold the value. Plus, they're saying, okay, there's an infinite amount of land available, hypothetically. You cannot easily replace the number of people and work required to build these properties either. There's a finite supply of labor, of materials, of infrastructure that goes into this. You can't suddenly double that overnight. We're seeing that in Canada. We've had huge housing shortages and no plan to address that. Same thing goes for Calgary. The builders are going full out right now based on the insane demand that the province is experiencing, and they can't add on extra capacity. You're looking several years out if you did want to build more than the existing pipeline. So yeah, there's a lot of land, but it cannot easily be developed, and it is never replacing the land that is closer to the popular areas.
And on top of that, even some of this land that you see, if you go around the circle, there's protections in place. There's greenfield land, there's grazing land, there's all this other stuff. So it's not just you see land, you can build land. There are restrictions on the land that you can develop as well. It's important for people to recognize that. Okay, this one was my favorite one. This was like gift wrapping for us. Calgary condos were more valuable in 2007 than they are today. Yeah, they were. That's why you should buy. We've been saying the same thing since 2019. You buy at the bottom. Like it's when you look at, there's been there's been negative price growth since 2007. That to me marks an incredible opportunity, especially when you compare it to the other metropolitan centers, large metropolitan centers like Toronto, Montreal, and Vancouver. Now, why has prices not grown in the Calgary market over that period? We talk about it every time we do our presentation. You had a crash in oil prices, and that resulted in mass layoffs in Calgary. And when you had the mass layoffs, then you had selling in Calgary, a massive selling, because people didn't have jobs anymore. They were selling, they were moving to other jurisdictions. What the difference is now is Calgary has diversified their economy. The growth that you see right now has nothing to do with oil and gas. Zero to do with oil and gas. There has been no expansion, zero expansion in the oil and gas fields. There are zero new oil sand development projects that are being launched right now. None. All the job growth in Calgary is in other sectors, not in oil and gas. So even if there is an impact to oil and gas prices from today, it will have zero impact on the Calgary economy. They've diversified their job growth away from oil and gas. And that those people that were laid off, I love saying this line, you can't lay off people that are already laid off, because those people weren't hired back on. Because again, zero zero investment in the oil sands. You know what you're actually having right now in the oil sands? You're actually having consolidation in the industry right now. You're at peak prices, and you have companies that are buying up other companies and consolidating the oil assets. You want to know why they're doing that? Is they want to make sure they maintain their oil production, because again, they are not developing any new oil sands. Why aren't they developing any new oil sands? Because the payout on an oil sand development is anywhere between 10 to 15 years for the capital to invest in one of those projects. So when I talk about investors, I'm not talking about me and you, but when big pension funds, when banks are looking at where I want to invest my money, do I want to have a 10 to 15 year out time frame to get a payout on my investment? No, I don't want to wait that long. I want to see quicker returns, and they're investing in other areas. So if I were to invest in fracking, I can have a payout in one to 3 years on that. And that's kind of where they're focused their energy investment dollars in the fossil fuels, not in oil sands development. So there's been no new jobs in oil sand development. So even if oil prices go down, you're not going to see any layoffs or anything, because there's been no growth in the oil industry in Calgary. Yes, they're seeing record level surpluses, which is good for Alberta, but that allows them to diversify their economy even more. So what we're doing is we're buying at the bottom. Now, what's been happening? We've been buying at the bottom. We've been telling people to buy at the bottom. Well, the market is actually growing in Calgary. Guess what? It's not going down. It's going up, because we're past the bottom now. And now we're seeing our upward trajectory on pricing. In October, we're seeing the highest levels of sales since 2015. Since 2015, the highest levels of sales in Calgary. Complete opposite is happening pretty much everywhere else in Canada, and specifically in the GTA. Now, why is that? It's because the market is strong out there. It's affordable, and we're going to go into all these points with our regular presentation. So Calgary is now going like this, and it has a long runway. Why does it have a long runway? Hey, guess what? Price has been flat since 2007. We're buying at the bottom. And let's look at our price gains. We're looking at detached prices up 12% year over year. Semi-detached 13% year over year. Ooh, those evil condos. Well, they're up 16% year over year because they've been flat for so long. You have room to grow. Row house is performing even better, nearly 20% per year. Months of supply, 1.47%. That is a seller's market. If I were to go to downtown Toronto condos right now, months of supply, seven months, full out buyer's market in downtown Toronto right now. Now, why is it a buyer's market in downtown Toronto? Well, look at what prices have done since 2007. They've went up significantly. They've gone all the way up to a medium. Oh, this is not just downtown. This is for the Greater Toronto Hamilton area. So this is including everything. Prices have gone up 167% as of 65% as of Q3 2022. So now we're seeing prices start to come down. Do you want to buy at the top, or do you want to buy at the bottom? I don't know, guys. What did Warren Buffett say?
Buy low, sell high.
Yeah, buy low, sell high. Be greedy when other people are fearful. Now, looking at going into that more, we're talking about a situation where when this email went out, someone invested in Calgary and they lost money when they bought. And the money, and it was worth less, and they had to close cash, and they weren't able to get financing on the property. Now, I haven't had any issues getting financing on my investments in Calgary. Nish, have you had any issues getting investments in yours? Our clients haven't had any issues, but you got to talk to the right people too. You do have to talk to the right people, and you can run into some hiccups. But if you talk to the right team of people, then you can get mortgages for your properties in Calgary, including your condos. You can get mortgages for your condos in Calgary. I haven't had any issues getting mortgages for any of my properties in Calgary. But again, You got to talk to the right people. If you don't talk to the right people, you can run into some issues. And that's when you reach out to us, and we're here to guide you to talk to the right people and know what speed bumps you could run into. And now, in this case, it led to a quick sale of the property. So whenever you buy and sell something quickly, you do expose yourself to potentially losing money on a property. Now, I wanted to compare that to if I quickly sold something in Toronto. So, and Kyle knows this building well. Kyle's living in this building right now as his house is getting rented. So, this whole complex. So I also own one in a phase that is just completing right now. So this is, if I chose to, I invested in this property in 2018, and it's a 2-bedroom, 2-washroom unit. I paid, it's probably can't see it on there, but it's $634,900. So I bought that in 2018 in Toronto. Price per square foot, about $830 price per square foot. Sounds great, right? That's a really good price per square foot when I compare that to other properties that have sold. But if I were to sell that property today, and I'm like, oh man, because I just got keys to it. I just literally got keys to it last week. If I were to sell it today, I bought it for $634,900. I would only get $600,000 for that today. So that's that'd be a $35,000 loss right there. If I just sell it today, I'm going to sell it today. But I got to factor in some other things too, because I'm in Toronto and not Calgary. So in Calgary, I have no land transfer tax, no development charges, no HST rebate that I have to deal with if I were to sell that today. So I got I sell it for $600,000, so it's $35,000 less than what I paid for it. But with my extra closing costs, I have land transfer tax of over $18,000. I lose my HST rebate, so that's another $24,000. I have my development charges, the pass on charges from the builder. Excuse me. That's another $15,000. So before realtor fees, before paying a realtor to sell this, I would be out nearly $100,000. It'd be $100,000 lost if I just chose to close on this all cash and sell it right away on the market. Guys, that sounds like a good idea. But if I were
recommend it.
No. If I were to buy and hold it, I'd be good. Remember, I paid only $830 a square foot for this. It's a 2-bedroom in the sixes. I'm going to be fine. I'm just in a situation right now where interest rates are high and there's a flooding of inventory on the market because of high interest rates. But if I wait to the future, this unit was selling for $100,000, more than $100,000. This was selling for around $750 last year at this time. So if I just wait, I'll be okay. But I want to factor in something else. And this is cash flow. Very, very important. Calgary still cash flows. Toronto does not. So also, I just got my keys for this property. Now, my occupancy fee on that, which would be similar to what what it would cost for me to carry this property right now to get a mortgage on that property, is every month I have to pay $4,165 to the builder, because in Ontario we have occupancy fees. I'm only going to get $2,800 per month if I'm lucky. If I'm lucky, get $2,800 per month for my unit. What does that mean? That means every month out of pocket, I'll be shelling out $1,365. So even in Calgary, let's say my unit doesn't exactly appraise out right away, but we're in a buy and hold situation, I'm going to be fine on my cash flow numbers. I'm not going to be bleeding every month. Here I'm bleeding $1,365 per month. That's a lot of money. That's $15,000 a year. $15,000 a year that'll be bleeding out of pocket on this property. I don't have to worry about that in Calgary because we're buying based on simple fundamentals, real estate fundamentals. Buy when the market's low and look at your cash flow. And that's what we're looking at. Anything you guys want to add on this stuff?
No. I think the other component about Calgary that you've noted here, but maybe to reiterate, is they don't have an occupancy period either.
No, there's no occupancy period. No, you wouldn't be paying this cost to the builder. So I have people that are paying higher occupancy fees than this, and they just can't wait for it to close so that they can get actually be in a lower payment situation. Again, I'm not dealing with this occupancy period in Calgary. I go right to close in Calgary. So I'm in a much better cash flow situation in Calgary, which again will help you on the mortgage qualification side of it, because they take that rental income and they compare it to what your cost is. With 20% down, look where I'm going to be here. It's not in a good situation. But again, I will wait this out, and the market will improve. But this is what closings are going to be looking like in Toronto in 2024, not in Calgary, not at all, because I have the cash flow fundamentals to back it up. So that's that portion there. I really encourage questions on that stuff. Anything else you guys want to elaborate on those slides? I don't know if there's anything else you want to say, but obviously we feel passionately about it. So why are Alex, Kyle, and Nish investing in Calgary?
I guess, Alex, I have one more thing to add.
Go for it.
We have absolutely no problem with people investing in the GTA. We
of course, yes.
the long-term potential there.
Thank you. Yes, I'm glad, guys. I actually say that in every sales meeting as well, and I forgot to say that. This is not a Calgary versus Toronto debate. You're fine investing in Toronto. I actually think it's going to be a good time to invest in Toronto sometime this winter on the resale market. I think there'll be a good opportunity to buy at a specific juncture, and I'll have that presentation for you. I think I'm doing that in a couple of weeks, talking about the opportunities. So yeah, like you're seeing a big pullback on pricing in Toronto. So how can I take advantage in Toronto? Well, I know that the point when you're going to look at in Toronto is when I'm getting closer on the resale market to being able to get to a cash flow neutral level. So I do believe pricing in Toronto is going to come down some more on the resale side before it rebounds, and specifically in condos downtown. But once I get closer to that catalyst point of breaking even when I rent out my unit, then you're gonna that's the bottom. That's the bottom right there. If we reach that bottom point, but that's definitely the bottom, that's when you definitely want to get into the market, because as soon as interest rates drop, that's when things are going to jump. And just think, I showed you the slide on what we're seeing for jumps in the Calgary market. That's at today's interest rates of nearly 7%. Just imagine what they're going to do when prices start to drop in Calgary. You're going to see pricing go through the roof there. So when we talk about Calgary and we talk about fundamentals, and we're confident about price growth, and we're confident about rental numbers, and why do we know this is going to continue on in the future? It's because we look at population growth, and the city of Calgary is growing. If we just look at net population growth, we've had positive net population growth even throughout COVID, where you have the population in Toronto actually going down during that time. The population in Calgary, even during COVID, was going up. These people also have money. Calgary has the highest millionaires per capita of major Canadian cities, and it also has the highest wages and salaries per employee in the country at $66,000. That was calculated in 2018. So they have money and their population is growing. But on top of that, their population is really going to grow in the future. So you just yesterday, Canada reaffirmed their immigration targets into the future. So we are maintaining that 500,000 people PR per year into the country. That's great for Calgary, and great for Alberta. So Alberta is going to grow the fastest out of all the Canadian provinces. Alberta's population is set to increase by 48% and be larger than BC by 2043. When we compare that to Ontario is going to grow. It's going to grow by 24%. There's only going to be 3 provinces that are going to grow in population. So all this record level immigration growth is only going to impact 3 provinces positively: BC, Alberta, and Ontario. And Alberta is going to grow the fastest, and Alberta is the most affordable, and Alberta offers you the best cash flow potential. The population of Calgary, which is the population capital and economic capital of Alberta, will have outsized growth. The province is going to grow by 48%, but Calgary is going to grow by 62.5% over the next 20 years. It's going to add 1 million people. So this goes into where Kyle was talking about the land shortage. Well, those million people are going to need roofs over their heads. You got to put houses there, and those people are going to want to be close to their employment opportunities. Just to put it in perspective, the population of Calgary right now is 1.4 million. It's going to grow to 2.4 million over this period of time. Like that, it's going to put significant strain on the existing infrastructure. Yeah, the people will build out, but there won't be the infrastructure there to get people back in regards to roads, in regards to public transit. So the closer you are, the closer to transit you are over that 20-year period, the higher the values of your property are going to go. And where are the people coming from? International, but interprovincial as well. So of that growth, just over 70% of that came from internationals, but another nearly 30% came from people leaving other provinces. Why are they doing that? Well, Alberta is affordable and Calgary is affordable. Calgary is the second most affordable city in Canada and the ninth most affordable city in North America. Affordability is driving people, and the job opportunity is driving people to Calgary. I have clients that are leaving Toronto and they're moving to Calgary. Why? Well, it's a lifestyle and it's affordability. Like I can get so much more if I live out in Calgary. And then when you look at that spread, we go back to that slide. 2007, where prices went like this. Toronto and the greater Toronto Hamilton area went this way, and Calgary stayed like this. Well, what's going to happen? Look at this surge of people that are coming into the province. That's when you're going to see the spike up of Calgary. Calgary's just playing catch up. That's all. We're not saying Toronto's going to go down. We're going to see a blip down, then we're going to see back up in Toronto. But Calgary has to pay catch up. There's all that growth opportunity. We're going to show you and we're going to show you the diversification into other industries. So it has nothing to do with oil and gas, because all those people that are moving there, well, where are they going to work? We're going to show you where they're going to work.
I'll quantify this a little bit as well, Alex. Normally, a year ago, 100% of the phone calls I was getting are from investors. Nowadays, about 1 in 5 of my phone calls, about 20%, are people considering moving to Calgary from across Canada. So I'm seeing this absolutely firsthand, and everyone seems to know someone that's already moved there. So this is really happening and starting to snowball further.
Today, I get an email from a client. Alex, our kids, so they're early 20s, just finishing up school. Our kids have decided to make their lives in Calgary. So we would also like to get a place closer to them for when we relocate back to Canada. That this is happening real time. And if you're a young individual, Alberta already has the youngest workforce in Canada and the most post-secondary individuals in Canada. Why wouldn't you want to live there? And now, if I'm an employer and I have a young affordable workforce, and I have the most educated workforce in Canada, I probably want to open up some offices there too. And we're going to talk about that.
And further to that, all gents, there's I'm looking at the list of attendees. There's I'm not going to say the name, but there's a Calgarian who lives there that's also invested in a pre-construction property in Calgary. So they're seeing the opportunities as well, being on the ground in Calgary.
Yes, great point. So yeah, Kyle, when we started doing this in 2019, yeah, there were no locals, like
absolutely none. And
locals,
agents even there that we talked to scoffed at the idea of investing.
Yeah, they made locals made fun of us. Like, what are you doing investing in a market? You guys are crazy. You guys are silly. Like literally, this happened. That's what people said to us in 2019 when we started. But we saw because we were looking at it on the other side, right? Locals were looking at it. Man, it's been raining forever. If it's been raining for 2007, so if it's been raining for 15 years, it's going to be hard for you to see the sunshine. Whereas we're looking at the lack of affordability in our markets, and when we see our markets, Toronto, Vancouver, and we're like, man, we're seeing opportunity. We're looking at the underlying statistics, population growth, diversification of the economy. This is only a ticking time bomb of positivity that this is going to explode. This can't stay down any longer. And that's what we're seeing happen now. And again, we talk about the gap. We're not even at 2007 pricing, and Toronto and the Greater Toronto area has went up 165% during that time. I'm not saying that Calgary property is going to go up 165%, but there's room for growth in that area, and that's what we're capitalizing on with the positive cash flow. So even with the way that rental rates have grown in Calgary, which they've grown 30% year over year, they're still significantly behind where similar properties be renting in the Toronto area. So there's still an affordability there, even at the 30% growth in rental rates, and there's still room for those rental rates to go up there. And when we look at the economic capacity of Calgary, we look at the big three: Toronto, Montreal, Vancouver. Calgary is number 4. Calgary has economic clout. Its economy is bigger than whole provinces like Saskatchewan, bigger than the economy of Manitoba. It is a powerhouse out there. When we look at head offices, the head office count in Calgary is only second to Toronto. So there are a significant presence of head offices in Calgary because that's where, and what do head offices mean? Higher paying jobs. And one of the reasons why you have a large concentration of head offices in Calgary and you have strong economies in Toronto, Montreal, Vancouver is there's only 4 true international airports in Canada: Toronto, Montreal, Vancouver, Calgary. And you need an international airport to have a head office presence. And Alberta is going to lead Canada in economic growth 2023, 2024. So you're going to continue to see the economy grow in Alberta. And they're adding jobs. They're adding jobs. So all these people are like, where are they going to work? Don't worry. There's lots of job openings in Alberta. Does Ontario have more job openings? Yes, Ontario has more job openings, but Ontario is much bigger. If we take this in a per capita basis, that's where that black line indicates the per capita basis job growth in Alberta leads Canada in regards to per capita. And then on top of that, it's second in Canada in regards to actual job growth, but per capita number 1. Now the oil and gas. The talking about that, where does oil and gas come into play? Not in job growth. We've discussed that at the beginning of the presentation. We're not looking at job growth for Alberta, but what does it do? It does put Alberta in a very good financial situation, and you get to use words like surplus, where in other provinces you use the words deficit, and federally use the word deficits. The deficit is growing in Ontario. The deficit is growing in Canada. But Alberta is running surpluses. And they were in a $13 billion surplus. And what do they do with that money? Well, they use that to pay down their debt. So they're actually paying down. They're not giving all that money away. They're using that money to pay down debt. And Alberta already, before that, had the lowest per capita in Canada. And now they're paying down even more debt per capita. And what does that allow them to do? Allows them to have the lowest corporate tax rates in Canada, no provincial sales tax. What does that mean? They're the best tax environment in Canada. And what does that mean to businesses? That means that they get favorable tax treatment in this province. So that's what oil and gas does. Oil and gas allows Alberta to diversify their economy and attract different companies to the area. And Calgary is the economic hub with that international airport of Alberta. And they forecast surpluses into the future as well. And their budgets are based on $70 a barrel of oil, which is much higher than that today. So diversification. This is where Cal's going to jump in and talk about the diversification away from oil and gas. And remember, we started investing in Calgary in 2019 before oil was around $60 a barrel at that time. And there was no global conflict. And there was no COVID. So we were never looking at oil and gas when we were investing in Calgary. Go ahead, Cal, take it away.
Exactly. And Alex and I have seen this happen in the past. We're originally from Sudbury, which historically had been live or die on the price of nickel and the mining industry there. Nowadays, you barely know what's happening because Sudbury has diversified significantly away from the actual mining of the ore in the ground. Now it's heavily focused on other things like education, like mining industry, not actually mining the ore in the ground. And you're seeing the same sort of thing happening in Calgary. They're moving away from dependence on oil and gas from an economic standpoint, especially from jobs. And Alex, if you go to the next slide, you're seeing a significantly moving into the tech workforce, where yeah, where you're seeing a massive number of people being educated in the STEM fields, science, technology, engineering, mathematics. And you're seeing a lot of tech startups coming up out of that. There's over 400 tech companies, and the majority of those are startup companies. I attribute this highly to that very educated workforce, but also the close proximity and same time zone as California, as Texas. Those companies that have operations there are looking for low-cost centers. And Canada, you get to pay your employees a lot less, but you get a very similar quality. We have healthcare covered in Canada that many other jurisdictions don't. Not to mention the low-cost office space. Calgary still has a glut from the oil and gas consolidation that happened back in 2015, 2016, that it has not fully recovered from it. And you're seeing that in the price points for office space downtown, about $17.50 a square foot. It's pretty much double that in Toronto and nearly triple that in Vancouver. So especially, with possible tough times coming to Canada and the economy, a lot of employers are looking for low-cost areas for their operations. So it's no wonder that 1 in 7 of the 800 largest companies in Canada have their headquarters in Calgary. And the proof is in the pudding. You're seeing these tech companies grow from those startups to unicorns, companies with billion-dollar valuations. And there have been several of those now. And what's amazing is, once they grow this large, their founders, they often start investing in their friends' businesses, or they go and start another business. Look at Elon Musk. He didn't start at Tesla. He grew PayPal into a multi-billion-dollar company, sold that, and then moved on and started founding several other companies as well. So expect to see more of that as these founders start to build significant large companies. You're going to see more and more startups and more money flowing into the tech sector there as well. But not just the tech sector, big name companies, Amazon. They are setting up their Amazon Web Services in Calgary, only the second location in Canada. The only other one is in Montreal. TELUS just built brand new headquarters, TELUS Sky downtown, 60-story tower. They're investing billions into Alberta, hiring thousands of people there. Like Alex said, WestJet has they made Calgary their international hub for all of their flights. So that's amazing. Only 4 international airports in Canada, and now Calgary has one of those. WestJet is investing billions into the Calgary airport, meaning hundreds, if not thousands, of jobs there. And then de Havilland, another company. This one isn't sexy, but they're moving their operations from Downsview in Toronto because the land got sold. So moving everything to just outside of East Calgary. And this is going to be a massive 1,500-acre new development. And with it comes those 1,500 good jobs that they're relocating. And these guys manufacture water bombers and work planes, something that we absolutely need nowadays. So you have other companies outside of oil and gas setting up shop. So Eastern Calgary, especially, I think is going to benefit significantly from this announcement. Not only that, these are other tech companies as well. Some of these large Indian companies setting up shop in Calgary and even expanding their operations there as well. Infosys, Emphasis, SideTrade. You're seeing more and more of these announcements. And then back to basics, the big guys, finance, real estate. These are other industries that are growing there. TD Bank is going to be hiring all of their wealth financial planners in Western Canada and training them in Calgary. RBC has set up an innovation hub. Same with IBM. And innovation, again, is the name of the game around tech, around ideas, around an incubator city. And that is what is starting to happen in Calgary. And that's what gets me really excited and bullish about the job prospects and ultimately real estate prices there as well. You're on mute, Alex.
That's right. How will we know that this will continue into the future? Well, we've seen it actually happen already in the States. We're seeing companies leave California and Silicon Valley and move to other jurisdictions. And why are they doing that? Well, first of all, they're fleeing high taxes. Alberta is the lowest corporate tax rate in Canada, no land transfer tax or development charge, no provincial sales tax. mirrors that. Expensive housing, Calgary housing, second lowest cost of living out of all major Canadian cities, ninth in North America. So again, these companies are leaving California because A, they're taxed heavily there, and B, their employees is incredibly expensive for their employees to live there. And they move to other jurisdictions where they can pay less taxes, which improves their bottom line. And B, they can have more productive employees because they can actually afford to live in those cities and potentially pay their employees less because their cost of living is lower. And on top of all that, the jurisdictions they move to, like Texas, they are pro-business environments. And that's what we're looking at about Alberta. It's a pro-business environment. Some pro-business policies that we see in Alberta that we don't have in Ontario. Well, there's no rent control in Alberta, which is favorable because people that have rent control properties in Ontario, that's properties built before November 15, 2018, you don't have the ability to increase your rents. I have clients that units are $5,000-6,000 a month below market rates. Nothing they can do. You can only increase it by the provincially prescribed amount by 2.5%. Not so in Alberta. There's no foreign buyer tax in Alberta, unlike in Ontario or British Columbia. So an international can buy in Alberta without getting hit with I think it's a 25% tax now in Ontario. I haven't really been looking at it because we are in the 2-year ban for foreign buyers into Canada, which is a federal regulation, but you have no extra tax to pay in Alberta. You have and if I add to that, so we talk about students. So international students are still allowed to buy even with the foreign buyer ban, but up to a purchase price of 500,000. Well, there's nothing for 500,000 in Toronto, but there is in Alberta. So you can, as a international student, you can buy something in Alberta and live there. So that makes it attractive, and you have world-renowned educational institutions in Alberta, and specifically Calgary. There's no provincial sales tax. So that's a huge savings compared to, again, if you're in British Columbia and Ontario. No development charges. So when I gave you my example of closing that I have coming up, where I have that $15,000 for development charges, those are extra charges the builder passes through to the end consumer. I don't have to pay that in Alberta. My only closing costs in Alberta are my legal fees when I buy pre-construction. You have that, and we have a $10 billion stimulus package, which includes reducing corporate taxes, which is in play right now, and that gives them the lowest corporate taxes in Canada. So what are our current opportunities, Nish? Why don't you talk our current opportunities that we have in Alberta right now?
Yeah,
and
fantastic.
Thanks. Just before you do that,
yeah.
After that, questions are piling up. We'll be answering all your questions. So Nish will let you know about our current opportunities, and then we're going to answer everyone's questions.
Yeah, fantastic. So with the developers that we work with, we actually get opportunities ranging across all the different product types, from low-rise condos all the way to single-family homes that have secondary legal basement units that you can double up your income through. Currently, we have condos that are just outside the downtown core, about 15 to 20 minutes out, and they start in the low $300,000 range, anywhere closing from 2027 to 2028. We also have those luxury condos that are smack dab in the middle of where you want to be downtown, and they start in the high 400s, and they close in 2028. And then talking about some of the other product types, we have townhomes, both freehold and condos, starting in the low $500,000 range, closing anywhere from 2024 all the way up until 2026. And then the big daddies, the freeholds, starting in the high 6s, low 7s, also with additional rental options for the basement. The deposit structures are pretty easy to manage, anywhere from 10 to 15%, spread over the course of anywhere from 4 months to a year, depending on the project. And they also come with some fantastic incentives. There's rental guarantees, which is essentially the developer renting the unit from the investor for 2 years, providing them with guaranteed rent, and also managing the property and the tenant on your behalf for that duration. Now, that is, definitely a insurance policy, but based on what's happening with the rental market in Calgary, you can opt out of the rental guarantee program and rent directly to the tenant. We have a variety of property management companies that can work with you as well to make this happen. So you don't have to go on site and do the interviews and place a tenant yourself physically. And, you can certainly reach out to Kyle, myself, and Alex if you have any questions about some of these projects. We would be definitely happy to share the details with you.
So that's us, all our wonderful faces with different ends of emails. And our phone numbers here to reach out. You'll also, this has all been recorded. You'll get a copy of the recording, and then please reach out, email us. You can book appointments, and we're happy to have a Zoom or a phone call with you to answer any questions you may have. But now we will open the floor to questions that are building up here. Okay, so number one, thanks so much. Someone saying, I never miss your podcast. I love you guys. You're reliable and 100% genuine. That's why we like to have full transparency in what we do. Question here, always get this one, but good ask. How are you holding your properties personally? Are they held under a corporation, and what are the benefits? I'm corporate, Nisha's corporate, Kyle is getting to corporate. Why Kyle is a little different is because this actually answers the second part of your question, because Kyle worked for a company before. And so when he started his portfolio, he was just T4'd. If you're just T4'd, you're a salaried individual, there's no real benefit to you owning the properties in a holding company. The benefit of owning a holding company, if you own an incorporated business, there's a tax benefit to using my corporate dollars versus my personal dollars, because my corporate dollars are taxed less than my personal dollars. Your corporate dollars up to 500,000 are taxed at around 12.5%, versus on a personal level, they can go to over 53%. So I'm better off investing at my after-tax dollars of 12.5% versus over 53%. And that's why you would open a holding company. If you own an incorporated business, then you can move money from the incorporated business tax-free to the holding company. Otherwise, you can just do it in your own personal name. But great question. I never get tired of answering that. Because also when you buy a holding company, I have to do reporting every year. So I have to do tax returns on every person. And now I have a new return I have to do every year, which is the underused housing tax. So I had to pay to get that done as well. Obviously you can do it on your own. But I pay my accountant to do that. So there are some recording things that happen on a holding side. So if you're individual, just close into your own name. I'm not an individual. If you're T4 salary, just close into your own name. What is an occupancy fee? Amazing. If you're investing in Alberta, you don't even need to know the answer to that question. But if you are investing in Ontario, you do need to know what that is. An occupancy fee is when I buy if I buy a pre-construction condo in Ontario, I have two different dates. I have a date of occupancy and I have a date of closing. In Alberta, that's the same date. Actually, everywhere in Canada, that's the same date. It's just in Ontario, it's a different date. And how it works is that the builder can give you keys to the unit to occupy while the building's still under construction. And while we wait for that building to register and close, you're going to pay an occupancy fee to the builder. And that's made up of your maintenance fee, property tax, and the interest-only portion on the amount outstanding. Why we have a big gap in that number. Previously, that number used to be less than what my mortgage cost would be, and people were generating nice cash flow during that occupancy fee time, and no one complained. But we're in a high interest rate environment right now, and that occupancy fee is calculated at prime plus. So on that 80% outstanding, I'm paying 7.79% on that. That's why my occupancy fee for that example I gave is $4,165. But my rent's only going to be $2,800, and I'm going to be negative $1,365, I believe it was, on the property. So an occupancy fee is the fee the builder can charge me while they finish the building and register the building. Now you're like, why would they do that? They're evil, they're profiting. There's a reason. They would actually prefer your money from the final closing on the property. This is an incentive to make sure they actually finish the building, and then the city gives the go ahead. So that's what it is in Ontario, the occupancy fee. You don't have that.
Alex, can you just quickly share the average length of what an occupancy period can look like as well?
Could be 2 months, could be 2 years. 2 years is the worst case scenario. So that's my worst case scenario. And I have had times when I go right to close in Ontario as well. They're able to go right to close. So let's say right to close, there is actually no occupancy period in Ontario. They're able to get everything done. I would say average is usually 3 to 6 months be the average, but I have seen them go to 2 years as well. Would you recommend purchasing an existing unit in Calgary or pre-construction? Either is fine, really. Why we like doing pre-construction is, Kyle, do you want to answer that one? Why you like pre-construction over resale?
Yeah, for sure. And thanks for joining, Ari. So I personally prefer pre-construction for a couple of reasons. Number one, in Calgary, you're typically only putting down 10% of the purchase price, whereas if you're going existing property, you immediately have to put down 20%. I'm not getting a mortgage today with pre-construction. I'm delaying that for 2, 3, 4, 5 years. Hopefully when interest rates are much, much lower as well. If I'm buying an existing property, I'm getting that mortgage today, and rates are around 6.5%. So really hard to make the numbers work with today's mortgage costs and today's rental costs. For pre-construction, I'm giving several years for the rents to continue to go up as well while the property is being built. Rents in Calgary are up 20 to 30%. So even at just 5% price growth a year, the building's not done for several years. I'm getting $100, $150 extra per year. So with mortgage rates going down, rental rates going up, you're very likely going to be cash flow positive by the time you actually get the property. But the best part is you're getting appreciation on the purchase price the entire time it's being built as well. So you're maximizing your leverage. If you only have 10% down, you're getting 10 times the leverage. So that's where we target return to 3% in our portfolio. We're happy with that because that's actually like a 30% return if you only have 10% down. That's a 15% return when you have to put your actual 20% down for the mortgage. What all this comes down to is you can generate supersized returns with pre-construction more so than resale. Now, the pre-construction also tends to hold that value, the difference as well, because you're getting a brand new property when it's completed. If you're buying a 5-year-old property today, by the time that pre-construction is done in 5 years, it might be a 10-year-old property versus an absolutely brand new pre-construction unit that's just been delivered and that's covered by the Alberta 10-year warranty as well. So it's all about, how easy you want to make your life. Pre-construction is the absolute easiest way to invest in real estate. And I always say, I want to be a real estate investor. I don't really want to be a landlord. I eventually have to be, but I want to push that off personally as long as possible. So I definitely prefer pre-construction. That's the only route that I've ever gone. But I have had clients buy resale because that fits better for them. Completely up to you.
Yeah, with no issue. Go ahead, Nish.
One of the other ways that I was able to scale my portfolio as quickly as I could not do that buying resale properties. Buying pre-construction, you're securing a much lower price point because you're buying it a lot sooner than the closing date. And then you can put down those 10% down payments over the course of, 1 or 2 years on multiple properties, anticipating the closes to be, in 2026, 2027, 2028, 2029. That isn't possible if you're having to put down a lump sum of 20% and then getting a mortgage on all those properties in a short amount of time. Couldn't do that the same way with the resale in my situation anyways.
This is a good question. And Nish, I'll let you talk about this. Would cities outside of Calgary be a good investment such as Airdrie or Chestermere? We're very bullish on Chestermere, and Nish will give a quick 2-minute chat on Chestermere.
Yeah, so Chestermere is an area that we have an investment in. It's a townhouse. And for those that live in the Greater Toronto area or know the Ontario market, Chestermere is what you would call the Oakville when you compare that to the Toronto area. So the reason we say Chestermere is the Oakville of Calgary is simply because of the demographic. You have a executive community, and the individuals there, the families, they make well over $150,000 a year collectively. And they're also within a 20-minute drive to downtown Calgary. Essentially, you're going to be closer to the downtown core of Calgary when you're in Chestermere than other parts of Calgary. So when you're talking about commuting, you can get there very quickly. You also have a recreational lake, one of the only lakes in the Calgary area, the greater Calgary area, that you can actually enjoy in the summertime and when it's warm. People are able to enjoy water activities, boating, water skiing, all the fun things that you want to do as a family. And further to that, it's a family-friendly environment. All the elements in terms of the necessities and the amenities are already in place. So when we have opportunities come up in Chestermere, they are priced lower than Calgary proper, but they are going in terms of the appreciation at a rate equivalent to the Calgary market. So you can double dip on location and also the pricing structure.
Great answer. And then also there's a massive aircraft manufacturing facility that's relocating 1,500 jobs from Toronto to Calgary that's opening up. That's the Haviland facility. It'll be a 10-minute drive from Chestermere, which is the closest city to both Calgary and that facility. So where are those 1,500 people that are leaving Toronto going to live? Probably in Chestermere. So we're very bullish in Chestermere. I love this next question. Calgary market will not grow as Toronto market, which we don't know. We're not expecting Toronto to grow so we're not expecting Calgary to grow as much as Toronto. We just apply our cash flow fundamentals and look at population growth. Most immigrants come and settle in Toronto. Correct. New Canadians go to Toronto and Vancouver predominantly, but that percentage is increasing in Calgary. The population demographic of Calgary has diversified significantly. And that's also where you see, Kyle highlighted the examples of Infosys and Mphasis opening in Calgary, massive Indian consulting firms. That Northeast Calgary segment, which has the highest growth rate or highest appreciation rate for properties in Calgary. That's all driven by new Canadians, predominantly Southeast Asian individuals moving there. As the Wayne Gretzky comment is, you got to look where the puck is going, and the puck is going to Calgary. So yes, Toronto and Vancouver will always get a large proportion of new Canadians. But where is the growth the greatest? Well, if Toronto and Vancouver are still getting their regular number of new Canadians, but Alberta has increased their new Canadians by 100% intake, like that's where the growth is, as opposed to the leveling off of growth. And why would growth be leveling off? Well, guess what? It's affordable in Calgary, but I'd make the same amount of money. So I make the same amount of money there if I'm working. I pay less tax, and my cost of living is lower. So I'm net better off. And I got an international airport. And from a time zone perspective, I'm a little bit closer. So all those things factoring in, yes, Toronto and Vancouver will always get new Canadians. Now, continuing on this question, when prices are down in Toronto, why would you go to Toronto if you're living in Toronto? Affordability again. If you look at the cash flow numbers, I can't give you positive cash flow in Toronto. I cannot, not with 20% down, not with 20% down. Can't do positive cash flow. So where does the mom and pop investor go? If you put 50% down in Toronto, yeah, then I can start generating maybe a neutral cash flow level. And people will continue to invest in Toronto, and there's appreciation level in Toronto. Yes, but I can't generate cash flow anymore. So what about those individuals that are looking to grow a portfolio based on cash flow fundamentals that can't afford to be out? My example, gave you the live example, $1,365 per month. And that was a 2-bedroom price at $635,000. Find me a 2-bedroom price for $635,000 in the pre-construction world. Doesn't exist in Toronto. So the cash flow numbers aren't there. Then all those extra closing costs as well. Where does the regular person invest? Yes, professionals and high net worth individuals can still invest in Toronto, and we see great long-term potential still in Toronto. But what about that missing middle? Where are they supposed to go now? Let's just look at the cash flow fundamentals. And then I do like this last point. It's much easier to manage your real estate locally than in another city. Kyle, I'm so sick of driving to your neighborhood. I live in the West End in High Park, and Kyle lives in Leslieville. And with the construction and everything, it takes me an
horrible
hour.
drive.
It takes me like an hour each way, and it's in my own city. So I dispute that comment because I actually don't need to do anything when I'm in Calgary. Everything would be fully professionally managed. Niche owns in Calgary. Niche has no problem managing his properties. I gotta drive the stupid East End all the time, and terrible, terrible, and that's not going away anytime soon in regards to infrastructure in the city. Because what happens? Well, here goes. Now I'm going down a rabbit hole, but it's a good one. Let's talk about infrastructure. We talk about Cal. We talk about all the land in Calgary, right? But if we're adding 1 million people to that city over 20 years, we want to be close to the infrastructure, because as we build out and add more people, you're going to get more and more congested. It's such a pain in the ass. I got to be frank, driving over there.
Oh,
Alex
it's
is fired
horrible.
up.
I hate it.
Well, it's so bad. I hate it. Anyways, you can easily manage properties in Calgary, because you're going to have that fully managed for you. And I would say arguably it's going to be easier because it's so far away, you kind of have to manage it with someone else. Whereas Toronto, you're kind of like, I'm kind of close, I'm going to deal with myself. And then you're caught up dealing with things because you're close to it. There, you can just get someone else to manage it. So my property in Calgary, I forget I have it sometimes. I have to deal with more of my Toronto stuff. Calgary's fully taken care of. I know nothing.
So the other piece is the difference in Ontario and Alberta with the landlord and tenant board rules. I don't think we touched on that.
Oh yeah,
like
we haven't even
usually
talked about
do.
it yet. Talk about that, yeah.
It's fair. So landlords actually have rights. And because of the way the economy has seen a surplus in Alberta, they're able to have all these ministries that are fully funded, that have the manpower and the people in place to do things like evict a tenant, to do the paperwork. So something that would take 8 to 10 months in Ontario to deal with when it comes to a deviant tenant, it takes less than a month, 2 to 3 weeks, and you have them out. Right. So there are all these elements that are in place in Alberta that unfortunately in Ontario, it's not working the way it's supposed to. And this creates those additional headaches. As you start to layer on properties, imagine, half of those properties have deviant tenants that aren't paying you, that are giving you problems. That takes up a ton of your time and emotional stress, without a doubt.
Or if you want to increase the rent, which you can't do here, or if you want to sell the property and can't tell the tenant to leave, there you have fixed term leases. At the end of a tenancy, you can tell the tenant to leave out there. So great point, Niche. Like, just me going off on a tangent, driving East End Toronto, but there are actual structural things in Alberta which actually make it being a landlord easier and maintaining your property easier than it is here. That's absolutely correct.
And we all own property in Toronto, by the way. So it's not like we're bashing Toronto. It's just we're talking about the differences.
Not to pick on Toronto thing. It's just, where's the mom and pop investor go? Like that's where it is. I love that a Subway guy asked this question. So Brent, if you're still on here, have you talked about the new arena development to replace the Saddle Dome in downtown Calgary? No, but there's a massive $1 billion development in downtown Calgary where they're going to be building a new a whole new neighborhood around a new arena, which we haven't even talked about that, and we do have we see a lot of we have a lot of demand for downtown Calgary and purchasing in Imperial, which development we have, and that'll help drive values in that with that development, help drive values downtown.
Yeah, that's the Imperial project. So talk to us about that one. It's a great project.
Is pre-construction more expensive than resale? Yes, it is. The reason for that is the replacement cost is greater. So labor is more expensive. Materials are more expensive. Though that being said, in Calgary, you haven't had new development in a long time. So the majority of the buildings that you're dealing with on the resale market in Calgary are 10 plus years old. You saw where pricing's been flat since 2007. So do you think builders have been building property in Alberta or in Calgary? No, they haven't. So you haven't had builders building new product in Calgary. So resale prices are lower, but they're not even 10-year-old buildings. We're dealing with really 10 to 20-year-old plus buildings. So you're dealing with older stock. So even when these hit the resale market, these newer product, they will sell for more because people like new things. So there is a gap between the two markets, but the product types are vastly different as well.
And especially for the rental units, the majority of inventory is well over 20 years old. So we're seeing huge demand for anything built recently. Within the last year, the vacancy was less than 1% for new product because people are, making a good amount of money. They want to live in a good property, not a 50-year-old rental building that's run down. So they're willing to spend that extra money.
Yeah. I have 12 doors and 12 door 6 in Ontario, 4 in Calgary. but now running into the wall of getting a mortgage. Reach out to us, send us an email. We'll put you in touch with our team, seeing if there's something that they can do. Typical wall that people start running into is when they start building out their portfolio. When you get to 10 plus doors, 10 plus properties gets more difficult. So you got to be making sure you talk to the right people. So reach out and we put you in touch with some of our people to see if they can do something for you. This is an amazing presentation. I love it. Do you have to visit Calgary to purchase? Nope. Kyle has never been to Calgary.
Absolutely, everything is done remotely. You never have to go visit the property or see it, even at closing. The only thing you need to do is physically sign the closing documents, the paperwork, and courier that to Calgary.
That's it. Yeah, you'll do that. You'd be they'd be just like this on Zoom. The lawyer will be on the other side. You'll sign the documents, and then you courier them to him after. Yes, that's correct.
And that's just the final closing. For pre-construction, everything is done remotely. You sign the contracts using DocuSign. You provide the deposits at your local bank, so you never have to go to Calgary or see it.
Yeah. And then, and again, this is someone's asking if we can share slides. This whole thing's been recorded. So yes, we've got the slides because you have this whole recording. And Mohammed, please reach out to me directly. I do want to speak with you and have some things that I can do to help you out. So do that. So thank you, everyone. We've taken up way too much of your time. We went over there are options. Sorry, I just saw 2 more questions came in. The last 2 questions answering. Yes, we have lots of options. Property management companies easily introduce people that. And would you suggest a condo or detached home in Calgary for most appreciation? Most appreciation, probably actually the most appreciation we've seen have been on the townhomes. Row towns have the greatest. So I'd say the row townhouse have had the greatest appreciation. But again, all different. People like condos because they're the lowest cost option, and they're concrete boxes in the sky. Detached homes, we've seen great appreciation, but they're more work to manage. So it just depends on what product type you want to get, and book a call with us, and we can go into those and figure out what's best for you to buy. So thank you, everyone. You'll get a recording of this. We appreciate all the time that you've taken on this call with us. And we will talk to you all soon. And I hope that we made you feel more comfortable about Calgary. Thank you, everyone. Talk soon.
Thanks all. Have a good day.
Bye, everyone. Take care.